I wanted to take a moment to talk about our sponsor, Alt21, the foreign exchange and hedging platform that reduces the risk and costs of cross-border transactions. As a board member, there are few better feelings than making a suggestion which adds quick material value to your organisation. I remember when one of our board members saved us $50,000 with a quick introduction to a group discount scheme for one of our key suppliers. I continue to feel grateful to this day. Alt21 can offer exactly this kind of quick win for board members. By using their foreign exchange and hedging services, you could reduce your company's costs by 90%. For a company that has just 10 million foreign exchange exposure through its revenues or cost base, that could be over 300,000 back into the business. Alt21 are so confident that they offer the best value in the market. They show you how much they make from fees in real time before and after any transaction. If you want to save your organisation money on its foreign exchange and hedging, head to alt21.com. That's alt21.com to find out more. Hello, and welcome to Enter the Boardroom with Newroll. I'm your host, Oliver Cummings, CEO of Newroll, a board search specialist and market leader bringing science to the art of board hiring. Today's guest, Lisa Gordon, is Chair of Cavendish and a NED of 3i Infrastructure PLC, JP Morgan UK Small Cap Growth and Income PLC, Magic Light Pictures Limited. She's also an advisor to Fulcrum Asset Management. Formerly, she was Chair of Senkos Securities PLC prior to its merger with MidCap to create Cavendish. Remco Chair and NED at Alpha International Group, and SID at M&C Saatchi Group. Lisa also serves on the Capital Markets Industry Task Force, working with industry and government to drive forward the development of the UK's capital markets. Lisa, a huge welcome, and thank you so much for joining us today.
That's a pleasure, Ollie.
Lisa, today I want to zoom in to explore how board members can best navigate a challenging capital markets environment. But before we do that, can we talk about your own experience of growth through capital markets? And maybe before we even do that, can we just start with what sort of a non-executive are you?
Good question. I mean, I've been a non-exec, exclusively non-exec now for the last sort of 8 years, but I did have a non-exec role whilst I was still an executive director about 15 years ago. And I think my sort of guiding light is I always try and be the non-exec I wished I'd had when I was an executive. And by that, I mean that I think non-execs, and I'm sure we'll come on to talk about some of the challenges later, but non-execs need to be engaged. They need to be engaged really in the growth agenda as much as the governance agenda, if not more so. And so when I was an executive director, and I went on the board very young, it used to really frustrate me when non-execs came into the boardroom. They're unprepared. They hadn't done their reading, because we were, rightly or wrongly, preparing the board papers was a big deal. You know, it was our opportunity to showcase the business, to be tested, to be challenged. And in my case, because I was an executive director of a listed business, the next port of call for me outside of the boardroom was our shareholders, was Fidelity and Gartmore and Schroders. So I wanted the non-execs to really put me through my paces I was running the acquisitions business. So I really wanted to be tested and challenged. And I came out so often disappointed at the lack of engagement. So that's really what stayed with me now in my practice as a non-exec.
A recent guest commented they were responsible for a portfolio of 250 non-execs as private equity backed. They said there were two characteristics that they had identified in the data which would predict how much value a non-exec was adding. One was time invested in the role, and two was their ability to surface the key issues, and you could see that being surfaced up. It sounds like you had some non-execs who you didn't have someone who was doing that for you.
I think, look, I mean, I don't want to paint too negative a picture, but I think for a number of years, you entered the boardroom as a non-exec once you'd served many years in that sector. And it was almost like by right, the next step was you became a non-exec, whether it's in media or banking. And I think that's really changed. So, for example, I used to think that the boardroom was a really hallowed place. And I then read a book written by my first boss, Philip Auger, who was my boss when I was an analyst in the city way back when. And he wrote a book called The Bank That Lived a Little, which was the story of Barclays. And it was so interesting because effectively all your illusions just fell away. So Barclays, over obviously many years, the boardroom was the ultimate. It was the oak panelled corridors and dining rooms. And yet that board changed its mind, changed its CEO, changed its strategy pretty much every 2 or 3 years. And it did reading that book made me think that, so for all that wisdom that was apparently in that room, actually, where was the really natural curiosity? Because these were people that had pretty much served in the banking industry for years. And of course, as we all know in business, the one thing we can guarantee is that tomorrow won't look like yesterday. And I think it's just so imperative for non-execs particularly to have the ability to look round the corner and to ask the what-if questions. Every industry has been impacted by technology in one sense or another. And I think that's one area in particular, for example, that we could encourage a more diverse group of non-execs into the boardroom who have technology skills, AI skills, whatever it might be, that by and large, the non-execs could not really hope to acquire it at that stage in their career. So I think there's a real scope for more cognitive diversity in the boardroom. But I think what I really encourage anybody I sit on the board with is to ask those what-if questions. And, it's interesting joining the board of 3i Infrastructure and Fulcrum. Those are sectors that I wasn't familiar with from my executive career. And in fact, I've been very encouraged to ask the questions that I might think are the ignorant ones. But in a way, you're bringing a perspective because you're not steeped in that industry. And so that's why I think it's just so, as I say, it's so important for non-execs to be really engaged and to be looking around the corners. And I've been in industries, 2 industries in particular, that have been dramatically impacted by changes. One was the music industry and one was the media industry. And actually those questions were not being asked around board tables at the time of, what impact could technology have? And that is part of the responsibility of the non-execs.
We were talking just before we started about the episode with Helena Morrissey, where she talked about the challenges she faced at St. James's of asking those questions and the pushback that she got when she did. How do you, as a non-exec, when you're faced with those situations and you're feeling uncertain, you're feeling worried that you might be asking the stupid question, how do you give yourself the confidence to keep pushing?
I think it's hard. I think it's intimidating. And by the way, I may be wrong most of the time, and I probably am wrong most of the time, but you only know that when you've actually asked the question and opened up the debate. I thought Helena was incredibly humble in that podcast she did with you. When she was new, she was a new director on the board of St. James's Place. She raised a flag around the fees issue. It obviously made her very unpopular. And I've been in a similar situation with one of my boards, and it is very intimidating. And I think you've got to be prepared to stick your head above the parapet if you really believe something is fundamentally not right. I was on the board of MC Saatchi, as you mentioned, and the board gave in to pressure from an activist shareholder to come onto the board as a non-exec, big shareholder, which I was completely against and asked to go on record as being against it because I felt that it compromised the independence when we'd all been brought on relatively recently to sort out a big issue. And I was overruled, fine, but I was then very much in line of sight for this activist shareholder who was then a colleague on the board. Life was very difficult for me. I was right because in the end, that shareholder launched a hostile bid from within the boardroom. And we spent the next 10 months and far too much money fighting for independence, which we did manage to retain. But I don't think that situation should ever have been allowed to come about. So however uncomfortable, it was the right thing to do. And I think sometimes you do need to stand up for what you believe, but equally be prepared to be overruled. But it shouldn't remove the importance of standing up if you really believe something, which Helena clearly did with the fee issue at St James's Place.
You say very difficult. What does that mean in practice?
There was a lot of personal hostility. And, if you really care about business, somebody said to me once, there's a very fine line between really caring and being emotional. And, that is difficult. But my sort of response to that is, well, I don't think you'd ask me to care less about the business. And I really care about the businesses that I'm involved with for a number of reasons, mainly because they're people businesses. Cavendish is a good example of that. But also because I am so passionate about the need for business to succeed and grow in the UK. We can spend the next few hours talking about the importance of that. But I don't know many successful businesses where there isn't that energy. And I think you need that energy, and that energy's got to be in the boardroom all the way through the business. It is difficult sometimes. And I really felt, people like me would look at Helena as an absolute hero. I mean, she's got this tremendous career, and yet she said to you, it was really uncomfortable and she lost her confidence. And I think at the end of the day, we're all human. So my message is that people are approached about board roles. My guiding principle is I will only work with people that I feel instinctively I can trust and respect. And that doesn't mean that, we end up being great friends and go out for supper. But I think you've got to intrinsically be able to trust and respect your colleagues. Trust and respect that they'll tell you when you get things wrong, as well as support you when you get things right. And so I think that is something that's really important.
It strikes me as one of the really interesting things about board dynamics. You ask most board members, are you able to make courageous decisions? And they say, of course, I'll stand up for what I believe in. But one of the penny drop moments for me in the episode with Dan Gardner was when he was talking about bias. And the big difference with people's understanding of bias is some people really understand they do have bias, and other people just haven't yet realized they have bias. And I think it's the same with that courage piece, that there'll come a time, I think, for most board members when they won't realize that courage is required. And I'm curious to hear, how do you inoculate yourself against that fear of being cowed in that situation? You obviously managed to do it effectively. Did you have outside support that was helping you through?
I've been very lucky to have a couple of really good mentors, and actually they're personal friends as opposed to people that have mentored me in my career, but they have mentored me in my career because they know me really well. So one friend in particular said to me about this fine line between emotion and passion and caring. And he said, and I sat on the board with him actually for a couple of years. And he said, it's particularly difficult for a woman because if you get animated about something because you really care about it, you can tend to sound quite emotional. So his advice to me was, but he said, you've got to think, one, you've got to drop your natural octave and drop your sort of speed of voice. Now, some people could say, well, why should I adapt? But actually, it's about being effective. And secondly, he said, it's really about listening to hear rather than listening to respond. So when you're engaged in a boardroom, lean back, be thinking about, do I want to be Michael Parkinson or Jonathan Ross? And it's actually really good advice because Michael Parkinson would ask the question, sit back and draw the answer out. Jonathan Ross and Jonathan Ross fans, I apologise, but Jonathan Ross will be asking the question, not actually hearing the answer because he's already on to the next one. So, it's practical tips like that I just found really helpful because I think it didn't change what I was saying. It changed how I was saying it. And therefore, maybe it changed how it was being heard and received. So it's, we're all learning. And I think go back to the boardroom isn't this hallowed place. And everybody is there trying to do their best, I hope, or they shouldn't be there. And everybody's sort of learning. And I think what's great is that the boards that I'm on are much more eclectic than they probably would have been 5 years ago. I'm certainly what they would call a lateral hire at JP Morgan. I'm not an investment trust board. I'm not an infrastructure board. So I'm a lateral hire, and that does make for more diverse skill sets around the table.
Echoes there of Stephen Covey's seek first to understand and then be understood as the way to fortify yourself against, to be brave, and echoes actually of another guest that we had on Enter Boardroom, Jerry Brown, and he would make sure that he went and spent time in the organization very close to the executive so that by the time he came to the boardroom, he had absolute confidence about what he was saying.
Well, that's another really good signal, either positive or negative, is if you are allowed to access all areas. Because again, I spend a lot of time in the businesses. I don't think you can possibly do the job effectively unless you do. I'm not going to become an expert in the sectors, obviously, but I need to understand what makes the business tick, what drives people, how they measure success, what good looks like in the business. All of the businesses I've been involved with have given me access to all areas.
Let's move on to talk about the markets that people are facing right now as board members in the listed space.
It is a challenging moment in time. There are signs of hope and optimism, more because of the mess that's going on over the Atlantic. We've seen actually the biggest flight of investment away from the US in March for the last sort of 25 years. So 12 trillion has come out of the US into Europe just in March, which is extraordinary. Just to bust the myth that the US is the holy grail, the S&P's down 4% year to date and FTSE all share is up 5%. So I think there are some encouraging signs. The issue with the capital markets, to my mind, is purely to do with capital inflows, or in the case of the last 10 years, outflows. So we've seen about £1 trillion withdrawn from the UK market over the last 20 years from pension and insurance companies for a number of reasons which people will be very familiar with, whether it's Gordon Brown's tax treatment on dividends or the risk-off mindset that was adopted post some of the pension scandals. But the fact is that we've seen this massive exodus of capital from the UK market. And the stark reality is that a withdrawal of capital leads to lower valuations, leads to the UK being a smaller percentage of the global indices, which leads to lower allocations. So it's a sort of vicious circle. So the only way that you address that is to start to unlock that flow of capital coming back in. And that's what a lot of the pension reforms debate is about. And because I think for a number of reasons this is so important, it's not about, investment bankers. I mean, half of my life is outside of the capital markets. So I'm not pushing this agenda as a sort of self-serving investment banker. But the reality is that, public companies are absolutely fundamental to the economy. They're subject to public scrutiny, unlike private equity. No disrespect, Holly, private equity, I'm sure it was great. That you do question, would Thames Water have happened if it had been under public ownership? Because public companies are subject to very high levels of scrutiny and governance. We live in a country where we're having to take more and more personal responsibility for our pensionable futures. The vast chunk of capital has gone into private equity. And of course, private equity is open to the few, not the many. And so if we don't have a viable capital markets, and if we don't really get this difference between saving and investing, it does terrify me, actually, as somebody at the age of 58, how people are going to fund their retirement.
So for board members listening to this who are sitting on the boards of listed entities, they're staring into quite a difficult environment. One reaction I've heard from some board members is we just need to reposition ourselves and get ourselves a US listing. What are you thinking as a board member that you need to be doing in order to help your organizations be better positioned?
That might be the answer for some, but it won't be the answer for the vast majority, because we know the US is massively distorted, even with a bit of devaluation with the Mag 7. But it is a fact that if you're anything less than $1 billion, you won't get any attention in the US. In fact, there were 20 companies that IPO'd on NASDAQ in the last 20 years that have raised over 100 million. 4 of those companies are up. 9 of them have delisted, and the balance are down on average 84%. So when we talk about the US, people are generally talking about the Mag 7. So yes, if you're I know Klarna's looking at it, for example, that's of a scale where it would make sense. And obviously a lot of their market is in the US. If you are a UK business, then I think London is a very good place. And I'll tell you a couple of examples. Alpha, which you mentioned I was on the board of. Alpha, an Ideagen is another good example, which was a client of Cavendish. Both companies started on AIM. AIM is the hunting ground for the new FTSE 100 companies of tomorrow. AIM is an environment where you can, if you're acquisitive, it's a nimble environment. I mean, it's obviously still regulated compared to private equity, but it is a relatively nimble environment. And I was involved with Alpha when it was private, and it was founder-led, a guy called Morgan Tilbrook, incredible story, classic entrepreneur, very dyslexic, started the business when he was in his mid-20s and came to the market in June 2017 onto AIM. We had 3 private equity offers on the table at the time. And in all the discussions, I said to Morgan, what do you want to do? And he wanted to list for 3 reasons. One is he strengthened the balance sheet. He put capital onto the balance sheet, growth capital onto the balance sheet, not private equity debt. He wanted every employee was a shareholder and he wanted them to have a market. And of course, as a financial services company, the PLC status, was good for ProFarm. And so then we IPO'd that business at 60 million in 2017. It went into the 250 last year onto the main market. It's currently capitalized at over 1.1 billion. It's returned 15 times to shareholders in 6 or 7 years. And he will say, if he was in this room and you asked him and you said, what drove that growth? He will say the listing, because it put a discipline around the business. And he took that listing so seriously. So when he first approached me about being a non-exec, I said, listen, I know nothing about FX. I mean, I still know nothing about it. And I said, I'm not sure that I'm right for you. And he said, you understand capital markets and I want to be the best PLC CEO there is. So I need you by my side to help me do that. So he took his responsibility to shareholders so seriously. And this is the lesson, I think, for all boards. He invested not just in actually creating and articulating the equity story, but he really invested in being able to deliver against the strategy. So, and by that, I mean, we had 16 consecutive profit upgrades. Now, that's not to say that we didn't have bumps in the road. We had a major bump in the road, both with COVID, the oil crisis, and the market totally, not forgave us because we hadn't done anything wrong, but totally weathered that without any issues because it was explained so clearly in such detail. So my point is, I think we need to invest in, if you are going to go to the market, accept that you're entering into a contract with those shareholders that are providing you growth capital, and take that responsibility seriously because they will stick with you. It is the best. I mean, there's investors in this room. It is probably the best source of patient capital. And they want you to succeed, and they understand it's not a straight line trajectory. I do think the non-execs also have a part to play in that. They shouldn't just be sitting behind closed doors and not have any interaction with the shareholders.
So what, for that non-exec listening now, who's about to go and have a discussion with their board and thinking about the capital markets, their capital markets approach, you said, don't assume that you should go to the US and lean in and be proactive and engaging with the market. But what else is there that an experienced non-exec listening might not have thought of that they should be thinking about and discussing as it relates to the capital markets?
There's a lot of talk about private equity, and I think it is actually quite a challenge for boards to understand the attractiveness. If I was a new non-exec, would I join a listed board or a private equity board? The reality is tough because we know that life on the board of a listed company is challenging, subject to governance. I think, though, that if you really believe in the value of the capital markets because it democratizes investment, because it's so important in terms of that social contract, public companies, they pay their corporation tax, they innovate, they employ. I mean, we've got some great companies, innovative companies. Then I think, the UK needs to start backing the UK. And yes, let's be honest, financially as a non-exec, you'd be better off in private equity. But actually, for the long-term health of the country, for economic growth, I personally feel that you've got to get right behind public companies. I really do feel that strongly. So, I'm not asking everybody to be philanthropic. And there is a lot of discussion now around remuneration for non-execs. Oh, and by the way, just going back to Alpha, really interesting. Some people may have seen it. Morgan gifted, the timing was not great for me. I'm not bitter, obviously. I'm over it. But gifted £28 million worth of his own stock to the board and to his top 10 execs. No performance criteria for non-execs. Extraordinary. This was in February. And I asked one of the shareholders, JP Morgan actually, I said, God, Georgina, what did you think of that? She said, I thought it was fantastic. And, that's really interesting because this one thing I do struggle with actually is why are we conflicted if we were, in terms of options and that, when we're not conflicted by reinvesting, as I have done, over half of my fees in buying shares. So I think, this remuneration issue is becoming widely debated. CMIT have been pushing this agenda because it's a bit like politics. You have to attract the best talent and, there's no getting away from it. Remuneration is part of that, particularly as going right back to what I said at the beginning. If you expect your non-execs, as I expect my non-execs to be properly engaged, then you have to reflect that. And also, if actually our main driver, as I said, yes, we've got to look after the governance, but we've really got to be growing these businesses, then actually why wouldn't you align interests in terms of a hybrid remuneration?
Sounds like one of the key things people might want to take away from this is to be really looking at that remuneration strategy. We certainly see it on the platform that a lot of American prospective board members is just like, why would I come and do that for that fee? It's a joke. I'm not going to waste my time. Time is flying. But before we get on to the lightning round, can we talk briefly about the capital market reforms? For those not familiar with them, what should people be preparing for? What is the opportunity?
The opportunity there is threefold, but it all comes back to flow of capital. So UK pension assets, held in UK equities has fallen from over 50% to 6% in the last 20 years. And we have to look to reverse that. People seem to be rather worried about, can we force that? I'm not suggesting any mandatory move. But the reality is that we are a significant outlier as the UK does not back the UK. And that's why we've lost, so for example, we've lost 58 companies to private equity last year off the market. The UK stock market now has less than 1,800 companies. It was 3,200 or above 20 years ago. And I go back to my main point, which is that if you're somebody who's saving for your future, or investing for your future, where do you put that investment? That universe, the UK universe, has shrunk so much. So we need to get capital flowing into the UK market. The reason being that there are some great companies. We're working on an IPO at the moment. The devaluation has been because capital flowing out the market, not because companies are underperforming in terms of their own earnings growth. Going back to the question about boards, I think if the UK has the third largest pension pot in the world, we're talking trillions, even moving that dial from 6% to 7, 8, 9%, you're potentially locking 50 to 100 billion of fresh capital into the market. And, people talk about Australia, they talk about Canada. All our direct peer group invest significantly upwards of 6% of their pension assets in their own domestic economy. So we're not asking for any particular special treatment. And I think that, I would start with the local government pension schemes.
So you're saying a wall of capital could be coming if
the powers that be are brave enough to follow through with the pension review, then we could be unlocking a significant amount of capital into the UK market.
And is that too remote a possibility for board members to now be starting to plan for that? Is there anything they can actively be doing?
I don't think it is. I mean, Torsten Bell is the new pensions minister, and I'm sure you've all read his book. I did. I read it over Christmas. It's actually a great read. It's called Great Britain ? And bearing in mind, his background, and he was chief exec of the Resolution Foundation, which is focused on financial inequality, you would not expect to see some capitalist theories. He makes a really strong case in that book for pension capital. He says pension capital is the financial plumbing of the economy, and the issue has been this withdrawal of pension capital. So I'm hopeful. He made a speech a couple of weeks ago talking about this. I am hopeful that it is on the horizon.
So what should board members be doing?
So board members need to be raising their company's profile. They need to be making sure that they may feel that with an equity story over the last 3 or 4 or 5 years, they've been blowing into the wind because, it seems to be, it doesn't matter how good your story is, the market is devaluing companies, enabling, companies to be taken out on the cheap. So I think, board members need to be making sure that for a start, obviously, they need to have a robust defence strategy because shareholders are now saying, sorry, there's too many companies being taken out on the cheap. But on a more positive note, I think really ask your management team to present the equity story to you as non-execs. Make sure that it's really honed. Make sure that, as an investor, what would you be looking for? What questions would you be asking? Where do you think, how are we going to get above our peer group in terms of value, either perceived or real? How are we going to grow? Because one of the benefits, if there is capital flowing back into the market, is you can start to use the market again to fund acquisitions. So I think all non-execs should be involved in that. I think at the very least, they should be looking at draft version 4 or 5, because they are, going back to my point when I was an exec on the board, they should be the filter. They should be the final filter that's challenging the exec to say, well, that doesn't sound compelling to me. That's not strong enough growth. We need to be more ambitious. How are we deploying technology to drive efficiencies and effectiveness? All these sorts of things. These are the questions that shareholders would be asking.
So really get actively involved in energising that.
Yeah, and just to sort of close on that, I mean, I am very lucky that I sit in a number of different boardrooms, but sitting in the JP Morgan Asset Management is so insightful because I realise that Georgina and Catan, who are the fund managers, they are desperately looking for investment opportunities. I mean, so theirs is a small mid-cap, so their universe is FTSE 250 and below. They really want to hear interesting companies. So they're saying, come and talk to us. And I think it's the role of the non-exec to make sure that the executive are properly equipped to do that.
Lisa, time has flown, which means it's time for the lightning round.
Oh my goodness.
Where I'm going to say a short question and ask you for a quick response.
Okay.
Best book every board member should read and why?
All the Cavendish lot know this. Rebel Ideas, Matthew Syed.
Boardroom behaviour that irritates you most?
Surreptitiously looking at your phone. You should just ask for a loo break. That's what it's there for.
Most valuable board ritual?
Dinner.
Favourite quote?
Well, my children will tell me that you've got to be interested to be interesting.
Most significant professional insight?
Going back to the issue around looking down the road. So just very quickly, that when I was working in the music industry, I'd been trained as an analyst, which was, we were trying to make a call where an industry was going and a company was going within it. And I then joined the music industry in the early 90s where they were just making so much money from the sale of CDs. I was business development director and I did a presentation with the 2 founders of Napster. And anyway, the story is written up in a few places, so I won't bore you with it. But essentially, they did not want to know a future in which they didn't control the distribution of the product. And of course, we know what happened. And the streaming services actually ate their lunch So the record industries could have been at the forefront of that because they own the actual underlying copyright, but they didn't want to know. I was 27. I wish I was as brave now as I was then when I told them they were idiots.
Worst professional advice you've ever received?
Or probably try to be less emotional.
What have you changed your mind on about boards over time?
They are not the hallowed environments that I might have thought when I was younger, and they're just full of human people trying to do their best.
How are you better today as a board member than when you started?
Well, I'm a lot more tired, so I probably am not quite so feisty. I think, everybody will say it, that you learn more from the bad as well as the good. And the company that I founded with a colleague that was sold in 2016 and that's when I went non-exec. I mean, that was really interesting because I think I learned more from that than anything. We had a lot of different shareholders around the table with different vested interests. We had an amazing chairman and a guy called Andrew Wilson, who was just brilliantly adept he was such a low ego and he was brilliantly adept at managing all the different agendas around the room. He died very suddenly. In fact, I've still got his funeral card on my desk at home to remind me what good looks like. And one of the shareholders was sort of popped into the seat, and it just was such a stark reminder of same business, same challenges, different chairman, and it was night and day. And the business, it was eventually sold about 6 months later. I dread to think what would have happened if it hadn't been sold, because the boardroom became totally dysfunctional overnight. And that's what I learned. I learned the importance of being an effective chair and trying to bring some humility to that position.
Finally, 3 things our listeners should take from this episode if they take nothing else.
If they take nothing else, I think preparation is everything. I think the advice I was given around listen to hear, not to respond is really critical. And I think going back to the Helena example, be brave if you really believe in something, one way or another. Either you agree with something or you don't agree with something. Just be brave, because everybody is trying to find the right way forward. It is really important that showing up is not enough. I think you've got to really participate.
Lisa, thank you so much for taking the time to share your wisdom and experience.
Thank you, Ollie.
So we're now going to open it up for questions. We've got a couple of mics, so if you can just raise your hand and then we'll bring them round. And if you could say your name before you ask the question, that'd be brilliant. There's a question over there, sir.
Hi, thanks so much for all of that insight. My name's Isabel Kelly. I'm a NED and a board advisor. That role I got through you all. Thank you very much. I just wonder whether you think that board members should have individual performance metrics and your sort of achievements that they need to work towards. I ask this because someone who runs private equity boards said the other day that all of her boards have those, and it's not something that I'd heard of or thought of, but sounded like it could be a useful way to manage board performance.
I think the difference probably is that private equity are probably there to bring in business as much as anything else. Having said that, I honestly do think that is also important in public. So I'm not saying that we should all be sort of doing a quasi-exec job. Absolutely not. But I do think particularly at the smaller end of the market, I would expect non-execs to try and add value, as in open doors. And, certainly in assembling the board at Cavendish, that was very much part of the thinking. How you actually, equate that to KPIs, I think is more challenging. But I would encourage, and I had to learn this with Alpha. I mean, talk about uncomfortable. They do 360-degree reviews. How honest do you really want them to be? They were brutally honest. But it is helpful because I think we all need that feedback. And it also helps, obviously, to identify where there are skill sets and skills gaps. And as I said earlier, that all changes over time pretty quickly. So I was with a group of people yesterday, and we were talking about the lack of AI skills around the board table. And it's been a real passion point of mine that I'm very pro cognitive diversity in the boardroom, and I really want to get younger people into the boardroom. And I always say, don't worry, we've got your back on all the fiduciary stuff. But like I said earlier, you've got skills that we wouldn't even hope to acquire. So I think that board review exercise, rather than specifically KPIs, is really important. I thought it was a bit of a box ticking exercise when I first went through it, but actually it was incredibly valuable to see, not just where people could add value, but really, to be pretty honest, where they maybe needed to step up a bit more.
And just to add to that, we launched this thing called New Review for exactly this reason, because to my mind, what high performing area do you know where people don't measure results? I feel like boards is one of the few spaces, and it's ironic when they spend their whole time making sure the organization is well run, and yet they have so little data on how well they're run. But I think there are different degrees to which you can do that. One of my favorite articles comes from Reid Hoffman, who has his 8 rituals of high-performing boards, and is in the scale-up space. But one of the things that he does there is circulate a collaborative document where all the board members are asked, how can you help on this area? And so it becomes very visible who's adding value or not over time. And it was very helpful. When we circulated our monthly report, I put the names of all our advisory board members and what they contributed. It was incredible. I started getting calls a couple of days before it was due to go out from people saying, by the way, you do know I have this bit of value, added this bit of value. And I think it just changes people's mindset when they start thinking about performance. As Reid Hoffman says, there are too many board members who would be great for 2 years and end up being good or average for 10. And I think that's because we were missing a performance step.
Yeah, I think that's a very good point, actually. And it's a 9-year term. That might not be right now. The world is changing so dramatically. We shouldn't be afraid of turning our boards over commensurately.
Time for one last question before we break for drinks. Or are people ready for wine?
Well, now you've dangled the prospect of wine.
Hi, I'm Beatrice Holland. I sit on boards in the UK, the US and Norway, some private, some public. In fact, I chair quite a few of them. You were talking earlier about sort of compensation, remuneration. Obviously, one of the reasons why a lot of companies think that they shouldn't be listed on the UK if they've been listed in the US is because chief executives get paid better and they get a lot less grief for it in the United States. And so chairmen think that it's doing the company a favour to find the best people and pay them well over there. What are your thoughts about that?
I think it's very true. I think it's a combination of proxy firms in the UK have been super unhelpful in this area. And let's be honest, it's also the media. And therein lies a big difference, I think, between the UK and the US in terms of celebrating success. I think there's going to be quite a lot of change on remuneration now because we are playing on a global stage. And if we are going to be fostering globally consequential companies, then they have to grow in their domestic market. And that part of that clearly is talent. So I'm sensing both from the proxy firms we did a event Emily organised here a couple of days ago with FIT, and the feedback from them was that ISS is beginning to recognise that it possibly can't be as militant as it's been. But secondly, I was at an event with FTSE 100 Remco chairs last year, and they were saying they don't care if they get a 40% vote against now. Really don't. And in fact, I was talking to a non-exec yesterday who said, I used to get really upset if I got 98%. It's like, where's the 2% that didn't? He said, he's chair of Remco. He said he got 38% vote against. Said, I don't care. The main thing is we've got to be able to attract the right talent. And we are competing on a global stage. You know that better than anybody.
Thank you for being a brilliant audience. Thank you, Lisa, for being a fantastic guest. It's now time for wine and enjoying the opportunity to have a discussion with one another.
Thank you.